Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Okay, so get this, Broadcom. The company known for gobbling up other companies just had a huge EG year. Seriously, record-breaking stuff driven by their VMware purchase and, that whole AI explosion that's happening. But can they keep this up is the question.
Well, what's fascinating about Broadcom is they're not just buying companies, they're really good at integrating them, making them more efficient, finding ways to boost profits. They've got a system.
So it's not just about the shopping spree. It's knowing what to do with those purchases.
Right.
And their 2024 numbers definitely back that up. Revenue jumped 44% to a whopping $51.6 billion. Even if you factor out VMware, they still saw 9% organic growth on top of that. Plus, they returned a record $22 billion to shareholders, dividends, buybacks, you name it. They've set a high bar for themselves, that's for sure.
Oh, absolutely. That kind of success comes with some serious expectations. Investors are going to be watching very closely to see if they can maintain that momentum.
Let's talk about VMware for a minute. The integration's done, revenue's up, and they're beating profit expectations. Broadcom is positioning VMware as like a powerful alternative to those public cloud giants. It's like they're saying, hey, you can have your own data center virtualization, keep more control, and maybe sleep a little better at night.
It's a smart move, Spending on public cloud services is exploding right now. But companies are starting to get a little nervous about handing over all their data and control to these huge platforms. So VMware with Broadcom is offering a more private, a more controlled solution. It really plays into this whole trend of data sovereignty, who owns the data, who controls it.
And here's the kicker. VMware's operating margin under Broadcom hit 70%. That's insane compared to pre-acquisition levels. It's almost like Broadcom had some secret sauce for squeezing profits out of companies.
Well, it's not magic, but they are masters of operational efficiency. That margin jump, it's probably a combo of cost-cutting measures and really focusing on the most profitable parts of VMware. It's a textbook example of how they extract value from these acquisitions.
All right, let's move on to the big one, AI. Broadcom's AI revenue absolutely exploded, a 220% surge in 2024 to reach $12.2 billion. It's mainly driven by their custom AI chips, they call them XPUs, and all the networking gear you need to connect them, like building a superhighway for artificial intelligence.
And the key here is they're not just doing any AI, they're going after the biggest customers out there. We're talking about those hyperscale data centers, the ones that power the cloud. Those companies are building their AI infrastructure from scratch. It's a huge EE opportunity for Broadcom.
Get this, Broadcom is predicting their serviceable addressable market for these AI XPUs, and the networking could reach $60 to $90 billion by 2027. And they think just 3 customers will make up that entire market. That's a lot of eggs in a very small basket.
It's because this prediction is based on a truly massive scale of AI deployment. We're talking each of those hyperscale giants aiming to have 1 million XPU clusters by 2027. That's a level of computing power we've never seen before.
Okay, I can get a little nervous now. What if those 3 customers hit a snag or the competition heats up? Is this whole AI bet a house of cards?
Well, it's definitely a high-risk, high-reward situation. Broadcom is betting big on their custom chip designs and how tightly they integrate with the networking. They want to make themselves indispensable to those hyperscale customers.
Oh, and one more thing.
Sure.
Broadcom is already developing custom XPUs for 2 more hyperscalers. So is that spreading the risk or doubling down on it?
Well, it's a bit of both. If it works, it expands their market even further, but it means they need to win even more of these massive and complex deals. A lot has to go right for this to pay off.
Yeah, it's a high wire act for sure. And, with all this talk about hyperscale data centers and AI,
Yeah.
it's easy to forget about that whole VMware strategy they've got going on.
Right. Like we were saying earlier, they're pushing this data center virtualization as a way to kind of get away from those public cloud giants. But I'm still not sure how it all fits together. What's the big picture here? Okay, so imagine this: public cloud providers, Amazon, Microsoft, Google, they've been calling the shots for years, right? It's been this one-size-fits-all approach to the cloud.
Yeah, you basically just hand over your data, your apps, and hope for the best.
Exactly. And for a lot of companies, that works fine. But more and more businesses, especially the bigger ones, are getting a little uneasy about, putting all their eggs in one basket. They want more control, more security, more say in how their infrastructure is set up.
So they're looking for something between the public cloud and just running everything themselves, like a middle ground.
That's exactly where VMware comes in. It gives companies the tools to create their own private clouds, either in their own data centers or even spread across multiple locations. They get that cloud-like flexibility and scalability, but with the added peace of mind that comes from managing it themselves.
Ah, okay, now it's starting to make sense. So Broadcom is betting that this desire for more control, more customization, is going to lead to a shift away from the public cloud, at least for certain types of workloads.
That's a big part of it, yeah. And remember, Broadcom's not just offering the software with VMware. They've got the hardware side covered too. All the networking equipment to tie everything together. They're building a complete ecosystem for companies that want to go the private cloud route.
Right, they're not just a software company, they're like a one-stop shop for your whole tech infrastructure.
Next step.
That makes their strategy even more interesting.
Totally. And don't forget about the AI angle. Those custom AI chips they're making can plug right into these private cloud environments.
Wait, so companies could potentially have their own AI-powered private clouds? That changes everything.
It does. It opens up a ton of possibilities for businesses that want to use AI, but aren't comfortable being completely dependent on a public cloud provider.
Okay, I'm excited about this now. It feels like we're seeing a major shift in how companies use technology, and Broadcom's right there leading the charge.
I agree. They're in a great position to capitalize on these trends, AI, private clouds, and this growing demand for data control. It's a bold strategy for sure, but if they pull it off, the rewards could be enormous.
But like we were saying, it's not a sure thing. There are some big risks involved. What are some of the biggest hurdles they could face?
Well, execution is a huge one. They've made these massive acquisitions, and now they have to deliver. Integrating VMware, ramping up production of their AI chips, winning those huge hyperscale contracts, it's a lot to handle, and there's no room for error.
Yeah, you can't afford to stumble when you're playing at that level.
And then there's the competition. The cloud market is incredibly competitive with companies like AWS, Azure, and Google Cloud fighting for every bit of market share. Broadcom has to stay ahead of the curve if they want to not just survive, but actually thrive.
What about on the AI side? Are there other companies challenging them there?
Oh, absolutely. NVIDIA is the big dog when it comes to AI chips right now, and they're not going to give up that position easily. Plus, you've got all these smaller startups coming up with new AI solutions. Broadcom needs to prove that their chips and their whole approach can really compete.
So it's not just about having cool tech. It's about convincing customers that you're the right partner for the long haul.
Exactly. Building trust, showing reliability, providing great support, those things are crucial in this market.
So Broadcom has a lot on their plate, but they're also operating in a space with huge potential.
That's the tech industry. In a nutshell, high risk, high reward. And right now, Broadcom is swinging for the fences.
Speaking of risks and rewards, Broadcom mentioned something that caught my attention. Remember how we were talking about them relying on just a few clients for their AI chips? Well, it seems they're seeing a resurgence in demand for their broadband solutions after a bit of a slump.
That is interesting. It suggests that even with all the hype around cloud and AI, there's still a strong need for, you know, good old-fashioned, reliable, high-speed internet.
It's easy to get caught up in all the shiny new stuff and forget about the basic infrastructure that makes it all possible.
Totally. The truth is we need both. We need the cutting-edge tech like AI and the rock-solid foundation to support it.
So what's driving this renewed interest in broadband? Is it just people wanting to stream movies and play games faster?
It's more than that. The demand's coming from everywhere. Telecom companies around the world are investing heavily in fiber optic networks to handle all the data traffic from streaming, video conferencing, online gaming, everything. But it's also about bringing internet access to areas that have been left behind, bridging that digital divide.
That's a crucial point. Access to affordable, reliable internet is essential for education, healthcare, economic opportunity, basically participating in modern society.
I couldn't agree more. It's a fundamental right in this day and age. And the fact that Broadcom's seeing this uptick in broadband demand tells me that this push for greater connectivity is only going to get stronger in the years to come.
This actually ties into something we were talking about earlier, the impact of AI beyond just the tech world. As AI becomes more and more embedded in our lives, we're going to need even more powerful and reliable infrastructure to support it. That includes data centers and networks, sure, but also broadband access for everyone.
You got it. The rise of AI is going to put a huge strain on our current infrastructure, and it's going to require a lot of investment to make sure everyone can benefit from these advancements.
This is a perfect example of how these seemingly separate trends are all connected. The demand for broadband, The growth of AI, the shift towards private clouds,
Mm.
it's all part of this larger story about how technology is evolving and shaping the world around us.
It's like a giant complex puzzle, and with every new piece of information, we get a clearer picture of what the future might look like.
And the more pieces we can connect, the better prepared we'll be to navigate this rapidly changing world.
Well put.
Now, while Broadcom's AI and cloud businesses seem to be doing great, they also mentioned that their industrial business has been struggling, and they don't expect to turn around until like the second half of 2025.
Mm.
What's going on there?
The industrial sector is kind of a strange case for Broadcom. It's a relatively small part of their overall revenue, but it's still a significant market, so it's worth understanding why they're facing headwinds in that area.
What's causing this slowdown?
It's a combination of things. The global economy is slowing down, which affects industrial production across the board. There are also supply chain issues and all the geopolitical uncertainty, which makes businesses hesitant to invest in new equipment.
It's a tough time for any company in that space.
Absolutely. And for Broadcom, it's a reminder that even a company with a diverse portfolio and a strong position in growing markets like AI can still be affected by what's happening in the overall economy.
It's a good reality check. No company is completely immune to the ups and downs of the global economy.
For sure. And it highlights how important diversification is. Broadcom's core businesses in semiconductors and infrastructure software are doing well, but they're still exposed to those economic cycles.
So even though their AI business is blooming, they can't afford to ignore the problems in other parts of their business.
Exactly. They need to keep managing their portfolio well, investing strategically, and adapting to the changing market.
It's a constant balancing act.
It is. But that's what it takes to succeed in the tech world today. And Broadcom has shown that they're capable of handling these challenges. They've built an impressive track record of growth and profitability, and they're in a good position to keep that going.
But it won't be easy. The competition's fierce. The tech is evolving so fast, and the global economy is unpredictable.
That's what makes it so exciting. The tech industry is never boring. And for companies like Broadcom that are at the forefront of innovation, the possibilities are truly endless.
I'm really curious to see what the future holds for them. I have a feeling we'll be talking about them a lot more on this show.
I wouldn't be surprised. They're definitely a company to watch, and their story really reflects those bigger forces that are shaping the entire tech world.
Well said. You know, all this talk about Broadcom's strategy and the future of AI, it makes me wonder, all this talk about Broadcom's strategy and the future of AI, it makes me wonder about the companies that aren't these big tech giants. Where do they fit in this whole AI revolution?
That's a really good question. It's easy to get caught up in what those huge companies are doing, building their own AI empires. But AI is actually becoming more and more accessible to businesses of all sizes.
So it's not just a game for the big players.
Nope, not at all. You see, while companies like Broadcom are focusing on custom solutions for those hyperscalers, there's a whole ecosystem developing around AI tools that are more affordable and user-friendly.
Oh, okay. What are some examples of that?
Well, one thing that's getting really popular is cloud-based AI platforms. Companies like Amazon, Microsoft, Google, they offer a wide range of AI services that businesses can just access on demand. No need to invest in all that expensive hardware or hire specialized teams.
So like renting AI capabilities.
Exactly. It's a very cost-effective way for smaller companies to dip their toes into AI and experiment with different applications.
Makes sense. But what about companies that are worried about data privacy or want more control over their systems? Are there other options for them?
Absolutely. Another approach is to use those pre-built AI systems that you can deploy on premises or in a hybrid cloud environment. Those systems usually come with pre-trained models and software tools that make it easier to implement AI solutions even without a deep technical background.
So kind of like a plug-and-play option for AI.
You could say that. It's a good balance between the flexibility of the cloud and the control you get with on-premises solutions.
Sounds like there are a lot of different ways for companies to incorporate AI. No matter their size or budget, it's all about finding the right fit.
That's exactly it. The AI landscape is becoming more diverse and more accessible, and that's great news for businesses that want to stay ahead of the curve.
Speaking of staying ahead of the curve, let's go back to something we touched on earlier: diversification. Even with Broadcom's success in AI, they're facing some headwinds in their industrial business. What's the lesson there, especially for investors who are watching all this happen?
I think the biggest lesson is that no company is invincible. Even the most successful businesses can be impacted by things they can't control.
So even if you're really bullish on a particular company or sector, it's still smart to spread your investments around.
Absolutely. Diversification is key to any good investment strategy. It helps you minimize losses and protect your portfolio from those unexpected downturns.
Don't put all your eggs in one basket, right?
Exactly. Think about investing in a mix of different asset classes,
Hmm.
different industries, different geographic regions. That way, if one area of the market takes a hit, the others can help soften the blow.
Solid advice. Well, I think we've covered a lot of ground today. We talked about Broadcom's record-breaking year, their big moves in AI and private clouds, the comeback of demand for broadband, and why diversification is so important for investors.
It's been a great conversation, and I think it really highlights how fast things are changing in the tech world.
It does. And it reminds us that we need to stay curious, stay informed, and be ready to adapt. The only constant is change, right? Especially in tech.
Couldn't agree more.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.